What's going on, guys? It's Suareezy here, back at you with another Market Mondays. This week we'll be going over why it's important to be checking out volume at key areas. Alright, first up we got Bitcoin on the 24-hour time frame, and let's see exactly why we got Bitcoin to do what we're doing. So last week we were sitting pretty much right on the multi-month trend line, and what we did say is that we wanted to see the pull back to our monthly level to 21,708. If we happen to break that, to test the bottom of the overall range that we're playing within. Once that happened to break, we were looking for 19,666 to start. And one of the things I do want to go over today is going to be volume, and you will notice exactly why that is the case right now. Notice the type of volume that we're getting in right now, and notice other times where we happen to start getting abnormal volume coming in. The second week of January was a really good example of this, where we started pretty much getting darn near the same amount of volume at the same place. And one major thing that we also should be looking at is the type of level that we ran into was a major monthly area after we just pulled from 25 down to about 19,666 in pretty much a month, with no major pushes back to the upside after this major run from the January push. So not only looking at that monthly level, but looking at this monthly trend line as well. When we hit this, just because we broke this multi-month trend line and this multi-month trend line doesn't mean that we broke trend. One major factor that we're looking at is one major low, second major low, and we're looking for a third major low. Potentially this could have been one, but we ended up breaking it on the bigger picture. So technically, as of right now, where we got the true volume to come in, that's where I'd consider the third low to be. And when we get that volume coming in near these potential multi-month levels, and you're running hard into that level in one direction, and you haven't gotten a retrace to the other way for healthy profit taking zones, then expect the volatile move in the other direction, especially going off 1 month's worth of data. At least looking for potential pushback, at least one candlestick if we're talking on the 24-hour time frame. For specific example, this candlestick that we're watching right here, you have the major red candle that had formed, showing us that this was bearish, breaking the actual range, which whenever we break a range, we want to get 100% of that move. But notice what the next candlestick was doing. We happened to pull right to our monthly level, bounce right off of the trend line, and notice how that candlestick's formed. It's looking like it wants to actually potentially reverse, and look at the candlestick for volume that is actually coming in here. We're actually getting an increase in volume coming in at this point. Once we happen to break that last candle, saying, hey, we held the potential, what is support as of right now, whenever we happen to break that, we're at least looking for 100% of that candle. And it's exactly what we got, and some, to potentially take us back into the overall range that we're playing within for the last month or so. So volume is the major key to getting volatile moves, especially going to the upside. If you're looking for the downside move, ideally looking for reduction in volume, kind of like you're seeing up in this zone. Notice we tried to get the volume to come in, but there was just not excess volume that kept coming in. Just kind of tinkered off, which actually helped out with that price action movement right there. So watching volume near major bigger picture zones is going to help out a ton, and these moves should look a lot less random to you at these points. because bigger picture moves and bigger picture trend lines, support resistance zones are going to be very, very helpful over time. So make sure that you are drawing these levels, because people are playing them, and you definitely would like to be seeing these areas as opposed to just running into them and being completely confused going into today or into the week. So that was going to be it for Bitcoin. Let's jump into Ethereum. Alright, next up we have Ethereum. But before we jump into Ethereum, if you haven't liked, commented, or subscribed to the channel, please make sure to do so, as it really helps the channel grow. Also, make sure to turn on those notifications to be notified whenever we have any new videos being dropped. So, on to Ethereum. Alright, next up we got Ethereum. So, let's see what we did on this last week. We were pretty much sitting right on that multi-month trend line, got the pullback right to our range bound zone, and right to our monthly 1420. Just like with Bitcoin, we did pull past our multi-month trend lines, but what we did actually run into was the exact same thing. Just an overall bigger picture trend line that we ran into with a multi-month support resistance zone that we had sitting right at 1420. So just like with Bitcoin, we're going to be speaking about the volume that happened to come in just around this point. Notice just around the same time, just like with Bitcoin, that second week of January was when we actually ended up getting some true volume to actually come in, and that was actually insinuated by this move right here. Notice we actually start getting the volume coming in right around where we used to have 100% of a range sitting right at this zone, and we got a multi-month trend line plus a 1420 multi-month support resistance level, plus abnormal volume coming in at this point as well. And we had the exact same candlestick setup with Ethereum. We had the breakout of the range, we had the test of the multi-month trend plus the multi-month support resistance level, and we can see the next candle was confirmation to get 100% move off of that candle and some. So this is why we look at these major levels to look for the volume that's coming in to create potentially new higher lows. So higher low, and then the third higher low. Again, this happened to try to be the third higher low, but notice we did not get the actual volume to continue in that direction, as opposed to us getting the continuation in volume comparative the last two times. So currently, as we speak, what we're looking for is we're right back into the range that we've been playing within from about 1750 down to about 1420, so playing within a $300 range. Whenever we're getting a breakout of either of these directions, we're looking for 100% of that move. So if we happen to break out of the upside, looking for that 1886 to start, and potentially taking us that up to potentially $2,000 area, which happens to be a bigger picture 100% zone as well from the past. So that actually works out really well. So we're looking for this breakout zone, which happens to put us right back at the top, or looking for the breakdown zone, which would take us to 1420 down to 1281 area again. But yeah, this is definitely the area we should be looking at for a bigger volatile movement that should be happening. So definitely keep drawing your trend lines, keep an eye on the volume. If we do not get volume to come in, we pretty much might get the same exact move like we did up here, with getting the volume to tinker off and pretty much getting us to get faked out for the longs. If you're looking for the shorts, again, looking for major candles like this running into major multi-month levels is going to be very key, with volume reducing at that point. So again, watching the 1700 level and watching this major range that we're looking for. So break out of the range, looking for the 100% move in that direction. So Again, make sure you guys draw your trend lines, make sure you guys are watching volume and momentum, how that's actually moving, and watching how the candlesticks are actually forming going into the week. So that was going to be it for this week's Market Mondays, and I will catch you guys on next week's Market Mondays.